The furnace strikes again. Today was not a good day. Today was not a good day at all. You know why? Because the Nasdaq was down a full percent, and Tesla stock, my biggest position, was down 7% in the market session. So I am sad. I am having a bad day. Just kidding. I'm not letting it get me down. I don't have bad days in the market. I just, feel bad when my net worth goes down. But hey, talking about Tesla, I want to talk about Tesla recalls. So we had an article this morning from Yahoo Finance, and on the big print on the front page it said, and I quote, Tesla recalls 321K cars for a tail light issue, 19th recall this year for the automaker. Ouch, that sounds like a nasty article, but I know enough to interpret these articles. When I see this article, I need to go into the body of the article because it doesn't tell you if it was a hardware issue or a software issue. Tesla is what I like to call a big tech company, and I know that they handle the majority of their car recalls via over-the-air updates, like a tech company. But these articles don't tell you off the bat that if it was an over-air update or not. They just tell you straight up, Tesla recalled thousands or X cars. So immediately it causes Tesla investors concern, and it sucks because you have to jump into the article and really dive in to find out if it was an over-the-air update or a hardware update, meaning like, oh, they can just push out software updates, and whatever issue you had with regards to airbags, with regards to tail lights, they can fix over the air. Or do you have to bring your car in? Oh, such a pain. Do you have to bring your car in for them to service it? Well, the most recent one regarding tail lights was an over-the-air update. Well, big surprise there. So far in the year, Tesla has recalled 4 million cars in the US. However, according to NHTSA, about 99% of those cars are dealt with over-the-air updates. Only about 31,000 cars had to be brought into the shop for hardware to be replaced. So that represents about 2% of the Tesla cars on the road today in the US. So I just wish there was more transparency, more fairness when it came to the news, the media reporting on Tesla and the Tesla company as a whole. Just want some fairness out there, guys. Please stop playing favoritism. Everybody, want to jump into some other news by saying the king is back. And by the king, I mean Bob Iger. Bob Iger will be replacing Bob Chapek, the COVIDville CEO of Disney. I like to call him because he did take over the helm during the COVID era, and I thank him for that. The business had a very hard time. The parks were closed, and all they pretty much had, and thank goodness they had this because it kind of kept the stock up for a long time because they were killing it. Disney Plus. So Disney had the magic bullet during the COVID era. They had Disney Plus right in the nick of time when all their parks around the world were shut down due to COVID. So I have to thank Bob for that. But what I don't have to thank Bob is for him putting Disney in a negative limelight when it comes to the Florida Don't Say Gay bill. Look, without getting political, Bob Chapek kind of alienated the Disney company with regards to a view from a certain political party. And that's not good. I don't want my company to be on the news. I don't want my company to be in the mouths of legislators. That's not good. I already have enough with big tech's in the limelight of all the legislators and Congress and yada, yada, yada. And I don't like that. I don't want to be in the limelight. I want to be in the background making lots of money. So Bob Chapek, thank you for your time and thank you for your service. And welcome, Bob Iger. Immediately, Bob Iger released a memo letting the company know and letting the world know that Disney will be restructuring their business, stating, and I quote, "It is my intention to restructure things in a way that honors and respects creativity at the heart and soul of who we are." Iger went on to say that the executive team of Disney will work together on a design of a new structure that puts more decision-making back in the hands of our creators and rationalize costs. Good there. I love people who rationalize costs. I want to see the top-tier CEO executive team watching the costs because this growth at any cost that worked during the COVID era, that worked during low interest rate environments, it's not going to fly in today's market. People want to see profits. Iger's memo concluded by him saying that I fundamentally believe that storytelling is what fuels this company and it belongs at the center of how we organize our businesses. So as a Disney shareholder, I'm happy to see a change in leadership there. Bob Chapek gave it his best, but the best was not enough. And the damage to profits and the damage to the company's reputation, kind of had to say he had it coming. So everybody, that's the news with regards to Disney. Jumping into Sofi, we had some drama over in Sofiville today. So Sofi dropped 6% in the market session after legislators sent letters to financial regulators urging them to review the company's cryptocurrency trading activities. So Sofi responded immediately, and I'm thankful for this company's leadership. Thank you for responding to this because I was a confused investor. Probably like 20 minutes before this article came out, I added to my Sofi position, and once this came out, I added some more because thank you for responding to these allegations, Sofi. So Sofi came out and released a response. So let me quote you the response. So Sofi stated, SoFi takes our regulatory and compliance commitments seriously, including our non-bank operations within the digital asset space. We believe we have been fully compliant with the mandates of our bank license and all applicable laws. We maintain consistent, constructive dialogue with each other and our federal and state regulators. Cryptocurrency remains a non-material component of our business. As disclosed in our 10Q filing, our brokerage-related fees, which include all cryptocurrency-related fees, totals $3.8 million in the third quarter of 2022, and the fair value of digital assets held by third-party custodians for the benefit of our members, which is recorded on our consolidated balance sheet, totaled approximately $132.5 million as of September 30th, 2022. We do not engage in any other cryptocurrency financing activity other than allowing members to buy and sell cryptocurrency via our platform executed by a third-party partner, including no leveraging or yielding, which that is true. They do not have any yield, like you know how a dividend stock pays a dividend. On the majority of all the crypto brokerages today, you get a yield for holding Solana, you get a yield for holding Ethereum, you get a yield for holding Cardano. SoFi, they don't have any yield. You don't get any cash for holding cryptocurrencies on their brokerage, which I thought was kind of quizzical, but now kind of makes sense. It's kind of safer, you know, not lending out your crypto to other people and getting a yield on that. That puts you at a lot of risk. So kind of happy they didn't do that after all, because I do have some crypto, and I did buy Bitcoin today, like I do every single day during the week. I do that SoFi Invest recurring investment, and that's what I do every day. And kind of got my answer now that I found out that they don't, you know, they never do yielding because it puts you at risk. Moving on, SoFi ended its filing stating, we do not partner with FTX, nor do we have any direct exposure to FTX. Glad to hear that. I actually asked Anthony Noda, the CEO of SoFi, on Twitter, hey, do you have any exposure to FTX? Because a lot of people did. Right now, Genesis, the partner of Gemini, is in bankruptcy talks because they had FTX exposure. You know, all this drama in the crypto space is causing every cryptocurrency to fall. And right now, regulators are going after crypto brokerages. I would prefer them to go after Sam Bankman-Fried and the people at FTX and Alameda Research, and I want them to go after them. I want to see some headlines saying, hey, these guys are in trouble, not crypto brokerages or another small crypto brokerages like SoFi. Leave them alone, let them do their business. Unless they do something wrong, like flagrantly, go after them. But if they're just there selling crypto to people like me or you perhaps, leave them alone. They're not doing anything. So they don't even, like I said, they don't even yield. Why are you bugging them? Oh, kind of bugs me. I think people should be fair. Like the media with Tesla, they're not being treated fairly. So everybody, just my opinion. Moving on to earnings. We did have some earnings today, and they weren't bad. They weren't terrible. And that's why I'm so confused on why everything's selling off. Everybody's like, oh, we're all going into recession. Hey, we might be going into recession, but it's all about earnings, guys. It's all about earnings. I want to see companies continuing to, you know, get up to bat when it comes to earnings and, you know, hitting it a decent pace down the field. Right now, they're not knocking it out of the park like they were in COVID, but right now they're just, you know, hitting the ball. And that's, you know, sometimes that's good enough. So with regards to Dell and Zoom Video, they both beat expectations when it comes to revenue. That's good. However, when it comes to Zoom Video, their guidance was a little weaker than expected. So their stock is taking a hit. So Dell is down 2% in the after hours and Zoom Video is down 7% in the after hours. Ouch. Everybody, like I always do on crappy days, I did some buying. So let me tell you what I picked up today. I added some Tesla, SoFi, CrowdStrike, Palantir, Figs, Amazon, Google, and Allbirds. And like I said prior, within the crypto realm, I picked up Bitcoin. Everybody, have a good one. Talk to you later.